Hey, good morning, folks. Start the day out in the red a little bit. Kind of little weakness 2 days in a row. Do we have some rotation going on? We've been talking about hardware, software, hardware, software. Well, that software coming out of the corner here, kicking up its heels just ahead of NVIDIA earnings. Does that change the trading setup? Well, we'll discuss that. We'll discuss Home Depot earnings. We'll bring on Stephanie Link at 8:35 to get her outlooks on the market. And we got a little surprise for you. But you're going to have to stick around until 8:58 because we got an exciting new addition to the STN Network think tank. Let's go, Brent. Let's get it going on this Tuesday.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, good morning, traders and investors. We're looking at our charts here, brought to you by TradeStation, born to trade, chart analyze, customize, all in one platform. Trade smarter, move faster, stay in control with the platform built for serious AI traders. Well, folks, you see it red on the screen, down 38.5 handles in the S&Ps, knocking on the door of that low from yesterday. We'll see if it holds. The buck flat 99.15 TLT. Don't tell me interest rates are going down 15 cents, 83.41. Now what you want to see, USO up, new all-time high territory here at 263, 151.92. GLD and SLV up one day, down another. Well, they're both down today. GLD down 261, 415.82. Silver down $1.34 at 68.50. And Bitcoin, well, it tried to make that support be 80, but now it's down. It's down below 80, down $205. It's 76,690. Let's bring in an old member of the team, and that would be Triple D. And Triple D,
who's old?
Old member of the cast.
Old in tenure.
Yeah.
Not
clarification needed there. I was feeling bad about my life all of a sudden. Okay, good. Not old. You know why? Because I'm turning 50 soon, and it's just like on my mind. And I'm like, oh my gosh, what happened? I was 20 years old yesterday, and then I just woke up and I'm almost 50. Kids tell me I'm in my 50th year already, and it's getting you a little bit there, Joel. But I've got to catch up to you, so it's okay.
Yeah. Well, I know.
Triple D, you're spry as a young chicken still. You're looking good. You're feeling good. You're trading good. Trading better than ever.
Trading good. Trading well. But not, I don't know about feeling great. But anyways, we digress here.
My question. So a down day in the market, but they're going to pick up the slack, right? Like what, you just can't sell the market off. You can't have a broad
they have
market.
To buy something else.
Yeah, what are you going to buy?
They always buy something else. And we went with the rotation station, but we could have went with this title here as well. Chips out, SAS in. That is pretty much the morning here. So this is what is actually occurring. It has started yesterday morning. We could see it with ServiceNow yesterday morning. We talked about it in the think tank. That trend has continued. The selling of the hardware and the buying of the SAS has continued. Is it just like, the problem is we see this, and it lasts a day or two. And then it just goes right back into hardware, and they start selling off software again here. But if you look this morning, IGV trading up a cool 1%. Stocks like ServiceNow, what? Up another 5.6% after tacking on like 4.5% yesterday. Don't call it a comeback, but this stock was $85 3 trading days ago. It's 109. So boom, SAS is cool again. SAS is back in town. And you know what? That's not the only one. We talked about this stock yesterday morning in the think tank, ServiceNow, or Salesforce, because I said if ServiceNow is going to go, Salesforce is likely to follow. We know Benioff and McDermott have been tight for years. The stocks like to trade together. I've pair trade these things for years as well. And CRM was just sitting there yesterday with ServiceNow at 5%. CRM's trading down. I was like,
it was down.
This doesn't make any sense at all.
It was down. It was down at 172.
172, and I picked it up at 172 in the think tank, and then she just started running. And I obviously sell out because I was in it for a day trade, but continues. Now we're at 182. So is this the rally to chase? It's never a good idea to be thinking about chasing here. So if you're coming in buying service now, I think you're late to the party. The stock just rallied 25% in 3 days. So enjoy. I think it's a profit-taking moment more than a chase moment, but enjoy the SAS rally while it's here because these stocks have sucked. So it's nice to see a little bit of other stocks get, a little bit of luster around them, at least even for a day.
Dare I ask the obvious question, why is this happening this morning in ServiceNow and CRM? Is there news?
They're looking for fundamentals, and we did have some commentary. We had a buy rating yesterday, I believe, in ServiceNow, but I think it's just continued rotation here, and we know what this market likes to do the most. It likes to go up, climbs the wall of worry, likes to do all those things, but you know what it likes to do the most? Punish the maximum amount of participants. That's what it likes to do the most. And we're so crowded in hardware, and we've been talking about, could Micron have potentially topped at 800? When it bring up the chart, Joe, when it put the 3 tops up there. Talking about it, it's like, we're a little bit long in the tooth. We're overbought. Is the rally over? Is hardware no longer needed? Probably not. But is it overbought in the short term when it goes from 400 to 800 in a month? Absolutely overbought. Puts the 3 tops, and SanDisk leading the charge on the way down here too. Probably fell before Micron, although Micron, I believe, is down more now on a percentage basis here. But same thing, last week just felt like just everybody who was in. SanDisk at the end of March was $600. It goes to $1,600. If you are buying a stock that goes up 1,000 points in 5 weeks, and you're saying now is the time to get in, you are likely the person who is doing it backwards. So we just come too far, too fast. It doesn't mean it's over, but it means it's time for a break. It's time for a breather. It's time for a pause. And that is what we are seeing in the hardware names. It's not just SanDisk, not just Micron. We're starting to see the rollover here, even AMD, which I'm still long in my long-term portfolio. NVIDIA, nice reversal day yesterday, was up 5 points in the pre-market, comes back down 218. That reverses as well. The optical names, AAOI, big reversal yesterday, continued sell-off today. Light, don't forget about Light. It's not lighting it up here in the last week here. It's starting to come down here too. So you're just seeing the hardware names take a breather. They were simply overbought. And once people start heading for the exits, more people follow.
We talk about the technical picture of things and like moves and counter moves. And I just want to go to the CRM. It had the rally in the earnings, and then it had the check back, right? And like, what are we going to do after this earnings? It was real choppy. Man, it tested the low of the move, okay? And then, and then came back, recouped half of the move, and now you're back up at 182. So this has a little bit more to run on the upside, perhaps. But the ServiceNow, same thing. Boom, slammed it off to earnings, gave back more than half of the move, but didn't make a new low. And now you're right back here. So the next technical step, I know we're trading at 109.30, but can it come back and make a base, at this area? Actually, my retracement line moved on me. Let me move it down here because 93 was this area. Can you build a bid at 105? And I know you're saying, it's trading 109. Well, that's a check back move, and we'll see it is. I just want to talk about the catalyst. I think your biggest stock when you talk about this is the fall from grace, the one that started to go down much sooner. That was Microsoft. I had a check back move after its earnings report. And then, your buddy Bill Ackman comes in, gives it a vote of confidence.
Helps.
So, slowly, and then you get the insider buy. So you're looking, one catalyst maybe doesn't do it, 2 catalysts doesn't, but now you're getting, 3 catalysts in a row here with, so it was quite a few insider buys, right, in some of these stocks.
That's what I just wanted to address real quick. There was a bunch of Form 4 filings last night that ServiceNow filed. There were like 7 or 8. Insider transactions, these were not open market purchases. So I'm mentioning this to not be distracted by this news item. Some people might say, there was there was a bunch of insider buys in CRM in Service Now. That was not the case. These were not open market purchases. These were related to like restricted stock units and compensation.
Can you just quickly take 1.5 minutes or 90 seconds and tell us the difference between an open market purchase and, something that we're seeing, like obviously awarded through compensation? Like talk about the difference in the forms.
Yeah. Okay. So the forms don't change. Like they're all on a Form 4 filing, but what you want to look for is real quick education. You want to look at column 3 in the Form 4 for the code column, and it should say P for purchase. If you don't see P for purchase, if you see, like in the case of these now filings from last night, if you see an M or an F, it means that these were not in the open market. It means they were tied to compensation or maybe like a 10b5-1 predetermined trading plan. The significance of an open market purchase is that execs are going out there of their own free will and purchasing markets just like you or I can in the market. This is where the quote vote of confidence comes in.
Okay, that's great clarification here, Brentster. And obviously, stocks are rewarded more when they're going into the open market and purchasing, as opposed to a lot of other ways that acquiring through shares or acquiring through compensation.
Yep.
It's when those open market purchases are there that stocks really respond well. But ServiceNow is just rocking and rolling regardless here right now, and it's like anything it's seeing about buying, even if it's coming from predetermined plans or from compensation purposes here, because people are hot for this stock right now. It doesn't mean it's going to stay hot, though. It just, this is what they do. We rotate. That's why the name of the show is Rotation Station, because we are clearly seeing a lot of rotation here in the last week. And what the rotation really was yesterday and what it is this morning is leaders to laggards and laggards to leaders. What has SaaS been? It's been a huge laggard. What has hardware been? It's been a huge leader. Yesterday morning, we were doing the show. All the hardware names were higher. They rolled over. Micron gave back over 100 points. That is a huge key reversal. And then the follow through off in the next day. That doesn't mean it's over, though. Like, you're coming in here and shorting Micron now while you just watched it fall 135 points. Shorting Micron right now is the same as buying ServiceNow right now. So, do you lighten up in here? I think it's, more that a lot of times what we see happen in the pre-market, then it changes at 9:32. Think about your institutional money managers that are sitting there that aren't even at their desk yet. It's 8:12 in the morning. They're coming in. They're like, Micron's down again. Like, man, I'm sitting with a lot of cash here. Greg Abel's looking at his 50, whatever the hell he's got, 45% cash, and saying, man, maybe I should be taking another position. So I'm not that Greg Abel's going to go buy Micron, but we don't know that he's not. We don't know that there's other money managers that aren't there. The one thing that I've always said, or I've said for a long time, is the pre-market trader is made up of a lot of retail traders. They're up all night. They're younger. They're smaller accounts. When the real money comes in at like 9:30, that's when you sometimes see these reversals. And we clearly saw that yesterday because hardware opened higher and then tanked. And everybody's like, what happened? What happened is the institutional money manager came to their desk and said, we're lightening these stocks up. Doesn't mean it can't change again, but a lot of times what's going on in the pre-market is completely different after 9:30. So keep that in mind.
And just to mention this real quick, positive catalyst, negative catalyst. Well, another negative catalyst hanging over these hardware stocks is the Samsung, right?
Yes.
What's going to happen with Strike?
Good point, Joel.
Sure.
Down again. So sometimes all the ducks line up in a row for something going up, and then the ducks turn around and they start lining up and going the other way. So keep in mind that strike's still going on and having an impact on these stocks.
The strike has now been pushed to Thursday. So on Thursday, they're going to go on strike. What does that mean? Well, Samsung is one of the biggest memory makers in the world. So it bottlenecks memory even farther if they actually do go on strike. So we'll see. Maybe there's going to be a last minute deal. If they do, that could change things. We can say well, that should be good for Micron or SanDisk. But, Joel was pointing out, but you know what? Micron is a customer of SanDisk too. So it's going to or a customer of Samsung. So it's going to bottleneck their pipeline obviously more as well. So you got to consider all of these factors.
And real quick, why do you have the EWI chart up there, Joel?
Oh, because that's basically the biggest component of the that ETF. That's South Korea ETF here. So
Yeah, so if you go and break down the EWY, and it's always good to look under the hood, the number one component in the EWY is Samsung, which is 23.6% of the index here. So keep an eye on that. If Samsung, obviously if EWY can start to rebound, I think EWY is nervous here with the Samsung strike potentially, in the cards 48 hours from now.
Another big catalyst we have on the radar this week, folks, it's coming. Believe it or not, all the anticipation. The SpaceX IPO, the S1 filing will hit your local SEC Edgar Wire this week at some point.
They're anticipating it is going to be tomorrow. It did not come today, and we've been doing the SpaceX trade nonstop in the think tank here. It's been rewarding us. Even last night, it actually rewarded us anyways because DXYZ was trading higher for a lot of the night. We had NASA, which is another play on it, trading higher for a lot of the night, although it's just starting to roll over here. The trade could be on again here today. We'll see, but eventually we are going to get that announcement. It's going to be a buy on rumor, sell on news thing. It could be, but I think on the initial S1 drop, I think they get an initial pop. So I think there will be an opportunity there. But, this trade's been awesome for us. DXYZ is one of my biggest winners of the year. It started popping again here the last few days, and we were able to participate in it. So just been buying dips on this name. What is DXYZ? If you don't follow, it's a company that invests in private names, has a 20% SpaceX exposure. So you're looking at like other companies like Google, Amazon. Their SpaceX exposure, while very large in dollar terms, is not large in percentage terms for those companies there. So this ETF here has a lot more percentage exposure of their own assets to SpaceX, which is why we've been playing that one. SATS has been moving on it. EchoStar, we've seen some of the other ones, excitement around the space where ASTS is perked up here again. Rocket Labs is perked up here again, just getting excited around the whole space theme. I think once you actually get the S1 drop, then it'll be like maybe a couple weeks of quietness there. But then when we actually start talking about, SpaceX coming out, you probably pick up here again. So this is going to be a theme that's going to be talked about until we actually get the stock start trading here. Which is probably going to be, we're talking June, late June, they're talking about?
We heard June 12th, I believe. Don't quote me on that, but it's going to be somewhere around June 12th. And Dennis, you said something to us this morning that I want you to maybe focus in on, or you can say pass. You said in this trade, so this trade, the SpaceX trade, DXYZ, maybe some of the other ones, has been working super well for you. You said something, you said last night, it didn't work for us, but it didn't punish us. What's the significance of that?
Well, I'm not losing big on it. So I was able, we could see this morning, and DXYZ was trading up all morning, just started rolling over. I still have a little piece up of like 10% left of the position only here. So I'm getting hit dinged on just about. But, you come in, it's not announced, and we don't know. We don't know the day it's going to get announced. So I think you get a little bit of selling pressure. It's like it doesn't appear like it's going to be the day here again. They start selling it off. And, let's be honest, the overall, theme here, like we're selling off on the S&P. So that's putting pressure on stocks across the board. So you have to always consider, the market effects here. So when you got the market selling off 33 handles here, puts pressure on all trades. It doesn't give a pass to SpaceX, but a lot of these stocks are not trading down that much. So it's not like punishing us severely here for being in this trade, which is nice because, when you think the market's coming down, you come in, market's down 30 handles, and you come in and your DXYZ is flat. You're like, maybe we'll just get rid of this thing. And it was giving you that opportunity all morning.
So people are saying, well, it's down 83 cents. What's this guy talking about? How did he get out of some of it at a profit? Well, at the stock trading,
it's trading up all night.
Yeah, stock trader think tank. We are monitoring the markets, not around the clock yet. More on details to come on that later in the show. But here, before Dennis knocked it off for the night at 8 o'clock, right? You traded up there even before 8 o'clock.
I was trading up $1.50 last night.
Yeah, you traded 54.02 there, and then 8 o'clock, boom, you shut down 53.90. And even if Dennis would have got up at 4 a.m. in the morning, he would have been able to hit it in the 43 handle. So if you're new,
I got up at 6:30 this morning. I was still able to get out of it flat.
Okay, so if you're new to the show and you're saying, "What's this guy talking about? The stock's down 93 cents. How the heck? What is he crazy?"
It just sold off, started selling off about a half.
Exactly. So I just wanted to mention that, and then we got the speculation on what the symbol is going to be. Fee really thinks it's going to be SPCX.
I think so.
I think that's probably what it's going to be. A little underwhelming, yeah.
I would say X.
What did you want?
I'm thinking.
I mean, space. They could go buy Virgin Galactic and take over SPCE, which may be the best ticker symbol.
Well, Wouldn't a really like good trolley Elon Musk kind of thing to do to be like SPACE 5 tickers and just piss people off?
That would piss me off. Yeah, I hate
I'm going
typing.
with
I
gay
hate
fight.
5 letters more than anything. When something has 5 letters and I have to press the extra button all the time to trade it,
Forget about it.
Nothing
Not
ticks me
worth
off
it.
more than that. The Ford, like Ford, I just love trading Ford because it's so quick.
Just
I go
bing.
F, bang, done. Now I got to go, and I like trading Tesla, so I go TSLA. He goes SPACE. I'd be like super annoyed here. So hopefully, obviously it's just Brent's just joking with me, but
I'm just
5-letter ticker
trolling you.
symbols, tiny pie. I am with you. That is the worst. The worst. The worst.
All right, here we keep going, folks, on our little pre-market prep parade here this morning. A topic this week that has been on the minds of, I'm sure, a lot of people on the West Coast and Dennis's mind for not the only reason, but potential some trade here. We have some California wildfires that people are starting to get a little concerned with entering a dry season on the West Coast. We had PCG and EIX yesterday that seemed like they were responding to this discussion.
Yeah, they were selling off yesterday. Obviously we've went through this with PCG back in I think it was 2019 when the stock went from $25 to $5 and they thought the company was going to go bankrupt because of the fires. Did not happen. They found their way, or did they go bankrupt and reorg? I don't think so.
I don't think so.
They were in trouble though, because of the fires and the liability reasons. Okay, more wildfires. So automatically everybody starts thinking, oh boy, here we go again, PCG. Right. And you can see the candle yesterday. PCG goes from 1643 all the way down to 1527. Not to be left out here, EIX as well, which is Edison. It had sold off in the wildfires a number of years ago as well, back in 2019. And then also, I believe, again in 2024. So they've been through this a couple of times here too. Get these wildfires, these stocks start to get some sellers involved here. EIX sold off heavily yesterday. Did bounce from those lows. It got down to 65.02, bounced back up to 68.44. Full disclosure, I do have a small short position in EIX. Just was an overnight trade, which I will cover here today.
Big bounces though, off these stocks, and of course you just have to see, how things develop. I mean, it's catalysts that you really don't want to have to trade off, but in reality, this is what you have in a hot sector too, right? The energy sector. You had the talks of that deal yesterday, or pretty much. I mean, the guys were on CNBC basically holding hands, so it looks like that thing is going to go. Don't know if that's going to spark anything else in the any other mergers in the utility sector. But keep your eye on the news. I mean, to go down like you did yesterday, getting the bounce, and you're up a dime here. Keep your eye on the mark here, and also on your newswire, see what's coming out of California on that. Hope things turn out better.
Want to give a quick heads up? We do have an event today. Google. Is it IO or is it 10? Folks, chat. Help us figure this out.
The Google IO event here begins today. We can get fee saying in the background. We can get press releases from this event. We know smaller companies often release press releases, even from Google themselves. They do have an event. The Dell event continues today here as well. So keep in mind, there could be some press releases coming there. We're not necessarily saying they come from Google or from Dell themselves, but sometimes the smaller companies that are presenting at these events can also have press releases as well. And these are catalysts here too. I mean, Google has been on fire. We know Greg Abel took a bigger position in Google. One of the things that he has done right, because obviously the stock's at all-time highs, and he was buying it in the first quarter. The stock held up pretty well yesterday, despite hardware, and Google's been kind of tight into the hardware trade here. Despite that, Google really didn't sell off here yesterday. So Google, you got to like the relative strength. We do have this event here, can be a catalyst. We'll see if there's anything. Input, output, it stands for. Input, output, IO.
Oh, nice. Thank you. Thank you.
I liked your 10, like thinking about
binary.
Yeah, the binary. I like that too, though. So it could be double meaning there. We'll say it's double meaning, but input, output sounds good.
Yeah, that Goog was the one that got us off the mat, off the open yesterday. Remember, we just took off, and we're like, oh, what's up? What's doing? And they're like, Google rally, because we had like a flat to a little bit down open, and then caught a bit off the open and then sold off a little bit. So new all-time high made in Google yesterday, 404.47. But you know what? Not a new all-time closing high. That's back at 399.04. So keep on, if you're a long-term Google investor, you want to see that all-time closing high over $400.
Tiny saying VRT as an investor conference. We're getting a 2:30 today here too. I think V had this on our list as well.
Yes, totally. Yep.
Management presentations covering strategic initiatives, financial outlook, and data. Thank you, Tiny. VRT is tied in with the hardware trade, was selling off yesterday, is selling off again today. You got to group your stocks. Group your stocks. Is it hardware? Is it software? Right now, hardware is out of favor. That can change. Maybe we see Micron catch a bid and all of a sudden it's like, oh, VRT lags a little bit, because believe it or not, this is not algorithmic here. So humans have a chance on some of these trades here as well, where you get, stocks moving into hardware, moving over like groupings of stocks, and groupings of stocks change too. But right now it's all been about hardware. VRT obviously behind the cooling of the chips. That's why, it's tied in with the hardware trade. But, if the chips themselves are going down, the semis are a wreck, that's going to bring VRT down here too. And VRT started selling off yesterday. But I don't think the chip wreck is like, this is over, done with your chips, throw them all out. Sometimes it can be a couple of days. Sometimes it can lead into a little bit further. But I don't think the rally is completely over yet. So I'm not counting all these chips out. They've been knocked down, but I'm not counting them out. Home Depot?
Right. Yeah, let's do Home Depot. We are 26 minutes into the show, and we are getting to earnings here, folks. Home Depot this morning at 6 a.m. reporting let me get Joel's chart up here. Reporting a beat, very modest beat for the quarter. They reported 343. Analysts were just 2 cents lower, so really modest there. Sales 41.8 billion. Analysts were at around 41.5 billion. They did affirm their 2026 guidance. So a little summary here. Pretty much inline results and some affirmed guidance. Definitely nothing too exciting. Was it good enough for Home Depot investors this morning?
Kind of.
Stocks
kind
down.
of good enough. It's not crushed. The bar is super low here. Retail has not been, it's been basically one of the worst places to be. I think software has been bad. Retail's been real bad here too. And Home Depot's making a new 52-week low. And not only that, making a new 2-year low. And not only that, kind of approaching a new 3-year low. So, I mean, it's not been a good time here to be invested in retail. $439, the all-time high way back in 2024. We're $297 here now. Valuation is coming down. It's getting more reasonable. It's got a 3.13% dividend here. Is Home Depot going away? No, but it's just the consumer is just not flying as much as they were before. Like, think about like when you're a little bit strapped for cash, you're doing that reno, you're going to go do that. I mean, this is, what ties into all of this. We're going to hear from Toll Brothers tonight to see how home building itself is going. Obviously, the home builders have just been not the place to be here in the last couple of months.
Straddle riders are winning on this one, at least so far. $15 expected move. And you got a little bit of a pop. We were talking about this with Michael Houston yesterday. Stock in a downtrend, really no catalyst. The housing sector, I mean, interest rates, I mean, you think Kevin Warsh can lower interest rates and get things going, and that's fine here. But he was looking for this thing, maybe after this, maybe more in the 260, 270 area here, but not catching a bid at all. Step down seller. You did have if you want to look for something optimistic, which is going to be hard here, let's see if the institution step up at the low of the move, and that comes in at the 297 area. You did dip under it over the pre-market, but it's the only good number I could give you for Home Depot.
Let's look at the XHB chart here just for a second, because we're coming into a very critical level of support for the XHB as well. If we look here, Joel, and this level stands out like a sore thumb. 95.46, the low back in March. 95.40 within 6 cents, the low at the end of March. And now we're just kind of in that same area here with Home Depot today, just coming back down to that 95 area here. Support is support until it's broken here. You think there's hope for the home builders here, or is this just one of those levels that's eventually going to cave? Third time's a charm. We'll obviously find out with Toll Brothers tonight.
It's just hanging out. You don't want to see it just hanging out down here.
Yeah, they don't give you a chance to buy the low this much.
Yeah, on that one. So, yeah, you've had the turn getting tagged on that little piece of Lennar that I bought earlier. How things have changed in a year, and once again, I mentioned the interest rates. Not looking good here. Pending home sales and stuff. We'll get that data later today, but
10 a.m.
Yeah, where's the catalyst? And also you look at like your mortgage stocks here, Rocket now under
rates going higher. Long-term rates, TLT breaking down here is never good for home builders. Never good for, anybody's taking on serious amounts of, debt to do a project or build a home. So, I mean, the TLT is a serious problem for a lot of stocks. We have lots of things to worry about in this market. And we know hardware and the AI trade has held the market up here. But there's stuff, that's not going that well. Higher oil prices and higher rates, that's not a recipe for, the real economy to just be buzzing and humming along here. So I think, there's definitely going to be some tells here this week. You got our earnings calendar up here right now. Home Depot, Toll Brothers, obviously tonight. Lots of other retailers reporting lows tomorrow. How do they look? TJX, which has been a place where everybody likes to shop, and stocks come down recently. Target. Obviously NVIDIA is going to move the entire market on Wednesday night, but we're talking retail right now. I mean, Elf Beauty, Urban Outfitters on Thursday. We get Walmart. Walmart's, the trade down effect, so they seem to do well no matter what the environment here is. But there's a lot of big names going to report this week, so we've got to keep that in mind.
Yeah, and in the retail sector, which is very important. Walmart just hanging up here, not really giving in. What I like about Walmart, stodgy stock, right? Big institutional holdings, but you definitely you have the bulls and the bears kind of standing off here. You got a triple top at the, what is that, 132? No, it's higher than that. You got a multiple tops at the 134.50 area. And then conversely, on the downside here, boom, you got three lows in the same area at, let's just call it 128. So big standoff here ahead of earnings. See if we can bust out to a new all-time high, or does Walmart got something? Give it that. Yeah,
Costco busted out to a new all-time high yesterday, just kissing up near the all-time high. Beat it by a point there, Joel. So Costco, as much as it was ugly, at the end of the year, we don't need Costco anymore. I was in one of those stores last week. I tell you, there's no parking spots. Go in there and it's packed. I'm like, why do we even come here? Because this place, I know I come for the $1.50 hot dog, but holy cow, I got to fight through the mob scene to get there. So Costco, new all-time highs. Can't argue with that.
One of my largest holdings, and hanging on for dear life here.
Getting larger.
Getting larger. Boy, oh boy. I don't want to look at that chart. Now it's time to hedge. I'll tell Lisa. Now it's time to sell calls. And now chart looks too good. Why would you want to do something like that?
Guest is ready in the background. Stephanie looks ready to rock here. Let's run that guest intro.
Stephanie Link, High Tower Advisors, Chief Investment Strategist. Stephanie, how you doing today?
Hi, guys. I'm doing well. How are you?
We're doing good. We're just, we're looking at the markets and we're saying all these things are going wrong. All these things are going wrong, and the market doesn't care. So give us your macro take to get things started out.
It's pretty remarkable that the Atlanta Fed tracker actually rose last week to 4% for the current quarter, in the face of all the stuff that you're kind of alluding to. If you had asked me in January that we would actually be up 8% in the S&P 500 year to date after Venezuela, SCOTUS reversing tariffs, AI and software Armageddon, private credit, and now a war, I mean, that just speaks to the fact that the economy is really on solid footing, even though we have all of these unknowns. And yeah, I know it's been a narrow market overall. Maybe we're starting to see a little broadening out with the pullback in semis and a little bit of a bid on the software side. I personally hope, and I know hope is not a trade, but I hope that we do see financials do better. I hope we see some of the commodity stocks pick up. And I know they've kind of reversed this week. I think discretionary is very interesting, very, very cheap. And I have a good quote for you guys if you want to hear it.
Yeah, we do.
We do.
Okay. I just tweeted it out. It's from Bank of America. I've got to read it on my phone. Bank of America CEO, what we see in our customer base is in the month of April, our customers moved 5% more money in the economy than they did last year. And the gas increase is less than a half a point of that. The rest of it is just more spending. People are employed. They have more money in their accounts. Credit quality is good. There's nothing that gives you pause when you look at what people are actually doing. How's that?
Is it just consumer mindset has changed since COVID? Like, is this since like 2020, this mindset? Because people obviously, are always, saving for a rainy day. And then the whole COVID thing happened and people are like, we're going to live. You got this YOLO mentality of the younger generation where let's get out there, we only live once. Let's go here and, just spend. Is it consumer mindset that has just changed? Because I think about my parents. They were like, saving for a mortgage, saving for a rainy day, save as much, and they even talk like that still, and like the consumer mindset is just, the younger generation just doesn't care about the rainy days. They just spend. So maybe there's nothing that's going to curtail the consumer seriously. What are your thoughts here? Is this like, just the consumer is just different now?
I think that certainly there are generations that are different than our parents, right? That their activity, their behavior. But in general, we are a nation of spenders. We always have been, actually, whether we have the money or we take on the debt. It's always been a bad move to bet against the consumer. I mean, I heard your commentary earlier about housing. That's a different animal at the moment. If you get interest rates in the 5s, you're going to have a housing cycle. There is clear demand. But in terms of other retail, other consumer names, I mean, clearly services has been a bright spot over the last couple of years. In fact, the ISM services index has been over 50 for 22 consecutive months. So it's in expansion. So they are spending on services, some goods as well. I was very encouraged by the Amerisports report this morning. That bodes well for Dick's. I mean, they had 26% revenue growth and they guided higher. So there's pockets of consumer where you want to be buying or taking a look at. Just housing isn't one of them right now.
We're on Stephanie Hightower or Stephanie Link from Hightower Advisors. Stephanie, is it even? Is it just like a group at the top spending a lot of money and the lower bracket not? Is it even? What's going to carry the way?
No, it's definitely high end. I mean, that's why people use the term K-shaped. I don't really like that. But it's like the upper end is doing fine, and you know why? Because they're more insulated to inflation because they have homes. And home prices have actually generally appreciated over the last decade, and they have ownership in the stock market, and they feel pretty darn good with an 18% return last year, and a 24% return the year before that, and 23% the year before that. And so the middle tier and the low end, unfortunately, they don't have homes and they don't have equity, and so they tend to suffer a little bit more on the margin.
Let's go back and look at commodities. You mentioned them briefly here. I mean, even precious metals. Let's start there because gold and silver can't seem to get it going here. I mean, last year it was like, oh yeah, everybody's in gold and gold's just blasting off. We double basically in 2025. We continue in the first couple months of 2026, but now we've taken a pause. Silver went absolutely berserk in October, going from $40 to $100, over $100, and has come off here now. What are your thoughts here, gold and silver? Because you're kind of just stuck in the mud right now.
I've never made money in gold. I'll just be honest with you on that. I think last year, a lot of it was because you had central bankers changing their asset allocations, selling treasuries, U.S. treasuries, and just spreading it out elsewhere. It obviously is a hedge to inflation too, and we obviously have a little higher inflation. Silver, I understand more because it's an industrial commodity, and we have this AI boom that's happening. But clearly, I think if you want to play that via a commodity, that's copper and aluminum more than silver. But I understood the move and to some degree, but it was a little meme-ish, if you will. I do like the fact that we are seeing some of these other kinds of commodities that are doing better. But I do think that's really tied to AI, and I think those are buys. I think those are areas where you want to look.
You're talking like copper and looking at obviously it's got utility here. What are your thoughts there? Like just give us some thoughts there if you want.
I mean, I think, well, Copper, I own Antofagasta. They are just such a well-run company and way better in my mind than Freeport McMoran. But if you want to have copper exposure, I mean, obviously most people just defer to Freeport. I recently bought Alcoa because it's the same thing. I mean, it's all about electrification, EV, and housing, and all that stuff. So I think those are the two areas where you want to focus on. Utilities, I just find fascinating that Nextera buying Dominion is, I mean, that's mind-boggling. And it just speaks to exactly all the things that we've been talking about for years, that we just don't have enough power. Our grids are really in very poor shape, and we have to build more data centers.
Do you think that's going to spark something in the utility sector? I mean, we have not, I can't think of the last time that, we've had a major merger here. Do you think they're going to, look at the synergies and do things, or more of a one-off?
I mean, it's 9% accretive just on the deal itself, and that doesn't even take into consideration what they're going to do on the cost side of things. I think we will see more M&A in the space. It may not be the big players. I mean, these are two big players.
Huge.
I mean, that's why it was so mind-boggling. I will tell you, I think one name that's interesting that's actually down 9% on the year is Vistra. That one, I don't think they're a takeout. I just think the fundamentals make sense. They're the second largest nuclear plant company in the world, and that's going to be used. Nuclear, coal, natural gas, all this stuff is going to be used in this whole build out, in this whole AI infrastructure, what I call the food chain.
We started talking about this yesterday. I own Vistra. I also own CEG, Constellation Energy, in my retirement account here, because I'm with you. I think, we're going to need more energy. These are two huge players here. Why no love for these stocks? Because we've seen hardware, stocks just go berserk. But really, besides like a couple of names like Bloom Energy here, is it just, that they're all focused on just a couple of names like Bloom Energy, and the other ones just aren't getting any love from the retail trader at all? Why no love for a stock like Vistra or CEG?
I think people are concerned that these small power packs that Elon Musk has been doing and using in some of their data center build out is going to take over in terms of competition, that people don't want to wait for the regulators to approve from Vistra or from Constellation, that people are going to use these little packs of power, which I think is ridiculous. It just doesn't have size and scale. So I think it's an opportunity. I mean, the stock is, Vistra anyway, is super cheap. Constellation also is a great company. I own, the ones I own are, which are getting a little more popular. So I'm not crazy, and I certainly wouldn't be chasing them here, but like GE Vernova has done really well. Quanta Services has done really well. I also like the Vertiv as well. Dave Cote has done such a great job as the executive chair there. So I think there's a lot of names that have had a nice run. I think they can easily pull back 10-15%. I think those are the ones that you want to buy. And then I would also say, and I kind of throw in Rockwell Automation, but it is a little bit more on the automation side and robotics side. And I think that is a very interesting theme as well.
Yeah, let's talk the robotics side of it here, because I kind of thought we'd have more physical AI coming at us. It's been a pause here. It's been all about memory. I mean, this year has been about Micron and SanDisk and the memory names here. But I mean, I still see like what's happening in my YouTube videos and, seeing what some of these companies are doing with physical AI. Obviously, Tesla's trying to do a lot with Optimus here. But I mean, physical AI is still coming here. It's timing this trade that's interesting. And a company like Rockwell, there's also Symbotic that does a lot of, stuff as well. But even Tesla itself, like, what are your thoughts here on physical AI, like timing this trade?
I think that robotics is in even an earlier stage than AI. And I think it's going to be enormous. We have 1.4 million robots in the world. We're going to get to 155 million robots by 2050. I mean, just listen to, and this is really, in general for your audience, just listen to Andy Jassy, the CEO of Amazon. They have 1 million robots, by the way. 50% of their DCs are robotic. So, and they have said, and just listen to and read his shareholder letter, because you'll learn a lot about robotics, about AI, why they're spending so much, when they expect to see the ROI. I thought it was really well done, and it came out just a couple of weeks ago. But I think you have to think about robotics in 3 ways. brains, bronze, and batteries. So you need the intellect on the brain side. On bronze, you need the motion. And then on batteries, you need the power. And of course, as we know, we don't have enough power. So I think you are going to see much more activity in terms of building out on the robotic side. I think you're going to see much better productivity as a result. Right now, Amazon is saving $2 billion a year by using robots. That's nothing for them. It's a drop in the bucket, but it is certainly it's a powerful theme, I think.
Let's take one step farther here, because what does this mean for jobs going forward? I mean, like, I see this all the time. There's even a CNBC commercial that I see come on. There's a plumber and he says, you know what your AI can't do? It can't fix your clogged sink. And I'm like, one day it might, though. I mean, like, is it eventually, when we get into the robotics, good enough that they can actually come into your home and fix stuff here? Is this just like, like not reality, that it's never going to get there? Or if it does get there, what does that mean for jobs long term when physical AI starts to come into the work?
There's no question that there are going to be some jobs, especially entry-level jobs, that will be compromised. But I think that we don't know of new jobs that are going to be needed, number one. I mean, when we had the internet developed, we all thought that all jobs were going to be eliminated. And that was we evolved into the mobile phone and apps and those kinds of things. And so I think we don't really know what jobs are going to be needed. That's one. Number two, I think we are going to need more sophisticated electricians. So not necessarily a guy or a gal that can come in and fix your pipe, but you're going to need technology implementation to being, on the build out side of things. And you're going to need sophisticated welders, and you're going to need sophisticated pipe fitters. I mean, you should listen to the ex-CEO of Southern Company, Tom Fanning. That's one of his biggest concerns. And Southern Company, by the way, they were the last company to build a nuclear facility. I mean, he knows a thing or two about power. He's not so much worried about a bubble at all in AI. He's worried that we don't have enough people. And so maybe, just maybe, we start to see not Gen Zs, because I think they're too old, but I think Gen Alphas, maybe they start to figure out a different education, higher education. You might see more trade schools. You might just see more in terms of computer science and trying to build out on this whole infrastructure theme.
Stephanie, building long-term portfolios for your clients, taking a long-term perspective on the market, you have to recognize, we all recognize the S&P is trading well above its historical valuation averages. Are investors paying too much for AI growth here, or are traditional valuation models just outdated?
I think some of the AI build out, some of the semiconductors, some of the industrial companies are expensive. There's no question. But I do think that with the CapEx that is so high, I mean, $800 billion from Mag 7 this year, $1.1 trillion next, you're not going to see CapEx slow down. In a percentage terms, you will year over year, but you're not going to see a slowdown or a cut to CapEx because they can't afford to cut CapEx. That's the whole point of Andy Jassy's shareholder letter. That's why they continue to spend. And I mean, if he says that this is a once in a lifetime opportunity, that's like a revolution kind of thing. And so I think they are expensive. I think there are other ways to play it, like we were just talking about, the Vistras and the Constellation Energies, those kinds of things. I love the industrial, the physical build out. I love the commodity build out. I'm not as crazy about chasing semiconductors here. And I would say one last thing. Yeah, valuations are a bit rich overall, but earnings growth has been much better than we expected. It's running 25%. I've never seen that, Joel, in my lifetime, 25% earnings growth. The average, the norm is 5 to 8%. And not only that, you're seeing 11% revenue growth and margin expansion in the face of the commodity stuff. So I think you do want to pay a little bit more, maybe wait for an opportunity, though, on the pure play AIs, because they've had a hell of a run.
Way to balance it out. Stephanie Link, Chief Investment Strategist, Hightower Advisors, joining us for a great session on pre-market prep. Thanks, Stephanie. We'll be dialing you up again next month.
Thank you so much, guys.
Thanks, Stephanie.
All right. Creeper rally here, Triple D.
Yeah, bouncing back, and some of the big names. Micron is off the lows, was down $20, only down 9 here now. So we're seeing those money managers get to their desk and they're like, okay, let's come on in here and do a little bit of buying early here before this market opens here. We saw a completely reversal yesterday where hardware was up and software was down the pre-market. We're seeing today software up and hardware down. Could we see that reversal happen here again? Because this market likes to sucker you in and say, yeah, service now, look at it going. It's up at 109. I mean, we just came from $85 and it's still SaaS and it's still way, downtrend city here. And we know when I say, stocks and I heard downtrend rallies to be sold, I'm kind of sticking with that.
Yeah, I think also like looking at it today and then, tomorrow's events and stuff with NVIDIA, I think, maybe we might just bust out over yesterday's high, get back, near all-time highs, or just break down through yesterday's low. And I just kind of feel like, just things tightening up today a little bit, you're already seeing chop. I mean, how many times have you seen the complexion of the market, the pre-market, be characteristic of what you're seeing in the regular session, barring a truth or barring a war, or well, there is a war, but there's always the extenuating circumstances. So some days for breakout momentum trend traders, and then sometimes trade the range kind of days. We'll see how we're shaping up down 23 handles, but it doesn't feel like we're heading for the hills.
You guys look at this comment from BZ Tokyo in the STN think tank. He said he's joining late. Did you guys go over the strange comment from the Seagate CEO that freaked out hardware? I just heard a caption on CNBC that the CEO said he might have to cut sales forecasts because he can't get new factories online fast enough. This is not something that I don't think we had on our radar this morning, but this is interesting. BZ Tokyo, thank you for sharing that.
Seagate trading down here 720, and I'm obviously excessive demand is always a good thing, and they tried, but we have supply. I mean, Samsung strike issue is obviously an issue here as well, so just keep that in mind. That does indeed happen. One of the world's largest memory makers going on strike. It's not the time for it right now. If there's a last minute settlement, that might change things as well. But Seagate stock, give us a quick technical here, Joel.
Down $20 after a down day yesterday. You're off the pre-market session. I mean, nothing at 700. Your next daily low that comes into play. Wow, there's air in this thing. 666.30 is your next daily low. So half and whole numbers. Keep an eye on the pre-market low, and you're just hanging on the lows of the pre-market session here. 715.26. But actually, I stand corrected. You haven't even taken out yesterday's low. Like, what's the big deal? Who's heading for the hills here yet? Yesterday's low, 710.11. I'd say that is support, but the mark would be better resistance here at 740.84 for Seagate. I'll take a look at my Western Digi. I've been thinking about selling it, but this is just a much more tame stock, isn't it? I mean, it's lower price. Did get a double top in here, but once again, well, I mean,
250 to 500.
Yeah.
Is this the tamest one? Is that it?
That's the tamest one.
That's crazy.
Okay.
Breaking while. Yeah. You want to go, Dennis? Go for it.
Fuzzy Panda, while Stephanie was on, issued a tweet. They are short TE. We know T1 Energy was a stock we talked about yesterday with our buddy Leopold taking a position in it.
I have some of the color Triple D if you'll hear it. Yes. Okay, sweet. I'm on fuzzypandaresearch.com. T1 is not an AI play. It is a China hustle. The IP sale to a quote independent party, Evervolt, was supposed to make T1 FEOC compliant and unlock key U.S. tax credits. It was an illusion. It is accounting fraud to boost income via tax credits you'll never earn. We believe large restatements are coming soon for TE. And chat, Dennis, Joel, I don't know how much you guys follow Fuzzy Panda, but like, in my opinion, this is the same style of report that they do a lot of times. So something to keep in mind.
Things.
They don't sugarcoat things, but it is a lot of times they are related to like restatements and potential like fraud. One thing to keep in mind, the Fuzzy Panda report did not mention Leopold Aschenbrenner. Something to think about, folks. Did Fuzzy Panda write this report in the 24 hours or so since we heard about this stake? Maybe it's longer. Maybe it was over the weekend. Or did they have a short like this waiting, standing by, and wanted a really good time to execute on this short report?
Yeah, using the the buzz that's around it to capture some
Just
retail
saying.
traders that are stuck in the name all of a sudden because everybody is buzzing. The stock got up, I believe last night it was trading up like 770, 780 here, Joel, if you bring up the chart of it here. So, it's not just a matter of selling off from $7. It's like this stock was trading up like 790.
Yeah.
It
did. Yeah, it did. It did. It get 783. 783. Well, I'm not going to take sides between Fuzzy Panda and what's his name, like Leonardo Aschenbrenner or something like that.
Yeah. That was it.
Is it Leonardo or Leopold?
Leopold.
You
were close enough.
Let's call him Leo.
Leo.
I like that.
Right.
He's called Leo forever now. We're just going to call him Leo. Okay, how's Leo doing? So, but you know what? Leo is moving stocks.
I got Zoli maybe trying to track him down.
Leo?
Yes, Joel.
Yeah. We take Leo.
I like it.
We take a kind of conversation with Leo. We like Leo.
Yeah. 591. Doesn't look like it's like really dying to fill the range right. The gap from yesterday. But maybe it's only down 30 cents. So I don't know. I mean, how's Fuzzy Panda been on their calls? I mean, they haven't
hit and miss. I mean, all these guys are hit and miss. I mean, Left made some great calls. I know Left's in trial right now. They're trying to decide where they're going with all these short sellers here, which is interesting in itself. But he made great calls too. I mean, Fuzzy Panda, we don't know. Like, obviously, they've made some interesting calls, but you got to be skeptical a little bit when they're like, their Twitter avatar is a panda with two guns like this, and you don't even know what they are. Like, shoot stocks down.
Yeah, that's it. I think that's it.
A little bit. Yeah, a little bit skeptical sometimes of some of their research here. So.
All right, we teased you earlier in the show that we are expanding our coverage over on the Stock Trader Network and the Stock Trader Think Tank. And to give you guys more broad coverage, I encourage you to go over there and check it out. But do we have a drum roll for our new addition to the team?
No? Sure.
I suck at drumming.
I think he's drum rolling.
I'll drum
roll. Okay, ready?
Yep.
Welcoming to the stage and to the Stock Trader Network once again, ladies and gentlemen, Mr. Nick Brown. Welcome on air, Nick. How are you? Joining us for the summer.
Good morning, guys. Pleasure.
Helping us with the news, helping us with the on air. Thanks for joining us, Nick.
I've been following you guys since you guys started this gig. It's so good to be reunited with the original crew, with Joel, Dennis, and Brent, and of course, Feehan in the background. This is an exciting time for markets. What a discussion this morning with Stephanie Link. And I don't even know where to get started because there's just so much ground to cover as we head into the summer, as we head into Memorial Day weekend, as we head into the next, 4 years of market turmoil could be. I don't know. This is an exciting time. I'm honored to be here. I don't even know what to say at this point.
Nick, we've obviously worked with you back at Benzinga, so we know you know your markets very well. You're very well spoken. Nick's going to be helping us on our news desk. We recently, have our new news platform here, which we're using in the think tank exclusively here right now, but it breaks insider buys. It's breaking, lots of different things. And obviously, you're going to be helping to feed that as well, but also helping to provide us some online commentary here too, because you've followed the stock market for a lot of years here now, and we respect your market analysis too. You've done a few things for us in the past. So we're excited to be working with you here again. So just wanted to welcome you officially to the team here, at least for the summer here.
And how'd the school year go? Did you crush it again?
Yes, I did. 3.95 this semester once again.
Holy mackerel.
We got a smart one, folks.
We hire the smart ones.
Yes.
To compensate for The not smart ones.
That kind of brings up our overall GPA average, right? From college. Joe. Like I always say, you know, between my family and Lisa's family, we graduated in Michigan was well over a 3-point average.
There you go.
Funny.
Anything above a 3.5 any day, any more these days is good enough for the workforce. But I'm not part of the JOLTS data. So if anybody is looking for JOLTS data, I can be excluded because now I'm part of the STN team. So yes. I'm no longer finding a job like many other college kids at this point could be, because the job market is tough nowadays. And I know in my neck of the woods, everybody is hiring at no matter what the rate is, they are willing to pay because they need people and nobody is coming back. I will say, from being in Pittsburgh, guys, I don't know if you know this, but PNC is now back in the office 5 days a week. And this is like some groundbreaking news here. And let me tell you, traffic has gotten incredibly worse. And I've been out on the streets and talking to people, and they're saying this is not the time. And there's a lot of people actually leaving PNC trying to go find another job because they're just not happy with being back in 5 days a week.
Wow. Good stuff, Nick.
Great. We'll be seeing more Nick here over the next few days, few weeks, few months. So glad to have you on the team, and always a pleasure to be getting some good information out of downtown Nick Brown.
There you go.
Thank you, guys.
Thanks, Nick. We're going to head over to the think tank here right now. Nick Brown will be joining us here over there. So if you want to see more of Nick, you want to see more of me, you want to see more of Joel, Brentster too. We're over there. We're going to be covering the market open, looking at some imbalances here. You know, sneak peek. I don't see too much, but some of these like merger stocks, NEE, big buy and balance, 91,000 shares. We're going to go over and see if there's some trades over there. So if you haven't joined us, you can get a discount here for our PMP listeners. PMP STN, come check us out. There is a 7-day free trial.